I'm Will Bancroft, co-founder of the Real Asset Company, and we're joined today at Hind Capital's offices by Ben Davies, one of the best portfolio managers in the gold and silver space. Ben, thanks for joining us today.
Thank you very much. Thank you for the accolade.
Thank you. I wanted to ask you a bit about yourself, given that your background is quite mainstream in the financial markets, trading in various institutions, running prop desks. It's quite a personal and intellectual journey you've made to be running the fund you are now. Where did this start, and how did this process occur from trading government bonds to now being, you say you're not a gold bug, and I accept that point, but someone whose main financial focus is precious metals?
Yeah, very interesting. It feels like desert island discs, doesn't it?
You've got a music request.
Yeah, exactly. 99 red balloons, yeah, by name. Interesting. I mean, I think I'll probably rewind back to what's my interest in markets is people. I'm most fascinated by behavioural science, behavioural finance, and that interaction of people in the marketplace. After all, what is a marketplace? It's just a myriad of thoughts and decision making based on particular events, and brings into all these interesting subjects on rational expectations, hypothesis, etc., etc. Mainstream, probably because I didn't know any better. It is a journey. You've had to educate yourself. I think I've educated myself with a lot of common sense. I remember sitting coming out of the '94 bond debacle. Rates were going aggressively higher, and then really going into a period of where people perceive Alan Greenspan to they bought what he espoused, which was the productivity cycle. Rates would stay low, completely undermine the whole concept of the Taylor rule, etc., and that rates should have been higher, and Nehru was introduced. All these sort of fundamental concepts which are really all hogwash. We were in the biggest credit cycle ever, and there was some Kurt Reckenbacher was a guy I think I was reading pretty early on at this time. I certainly I understood and realised that rates were going to be much lower very early on in my career than many of the old bond heads. I started as a corporate and fixed income bond trader, but I didn't really understand fully the mechanisms of why until I read Kurt Rickenbacker and what the eventual outcome. I think for me, when I really began to think about what inflation and what the value of money was, and that came from a very common sense point of view, it felt to me that my own purchasing power was actually rising, yet we seem to have these very low inflation rates, and that, I think that most people questioned that at that time. I just took it to the nth degree and started reading about what was money. That led me into the whole devious world of deviant world of Austrian economics, which is I think is a beautiful school of economic language, purely for the prose that they write. Obviously Mises and coming to the latter day of Rothbard. Rothbard is a much easier individual to understand, and I enjoyed their work purely because of really the context of what it means to be a libertarian. Actually, that's what I was really interested in. I'm very interested in human nature, as I've talked about before, and I think for me, understanding that property rights were essential to any democratic system and how that related to markets. But to make the leap from working as a proprietary trader, I would say I worked for a fantastic company called Greenwich Capital that was owned as Greenwich NatWest, then became RBS Greenwich. So I really went into the lines then. I saw firsthand the desire to want to grow. This is RBS. Whilst still working under Greenwich, we had a very flat structure at Greenwich where we weren't allowed to take a huge amount of risk, but we had to make consistent P&Ls every year, and it was about grinding that out year in, year out, and it was a very successful proprietary area that I worked for. But we weren't swinging for the trees, that's for sure. We didn't have the trader's option. You had 1 year and you're out. Whereas I could see under RBS that there was this hunger to want to emulate some of the bigger US primary brokerages like Goldman Sachs, etc. And I don't want to talk too much about RBS. I did actually get asked to speak at one of the a program on the TV about it, to decline it. There's a no-win situation. But what really led me to the gold market, ultimately, having understood purchasing power concepts, inflation, and what money was and gold, I began to realise that the actual monetary regime we're under, which is Bretton Woods 2, is a semi-pernicious semi-fixed exchange rate with one, and that was creating horrible structural imbalances. And the whole vendor financing relationship was leading to them being able to export goods, recycling of dollars. That was causing rates to come lower in the US. People were able to fund houses very cheaply, ATM and that really was the essence. And very interestingly, we were the largest, we were the customer, not customer, we were the largest dealer to Asia on US mortgages, bonds. So I saw that flow through some of the desks near me. And it took me a few years to begin to really understand how much dollar accumulation they were doing and what impact that was having on rates. We actually did a study and we realised that rates were being suppressed by 100 basis points, but I would argue probably much more in the 10-year. So think of the impact, the refi impact that's having on mortgages, and then the whole spin-off effect in terms of growth through the credit cycle, enormous. And but the resetting of that years down the line of all the variable mortgages, I realised was going to be a major problem, and that's when I got out of the system.
Yeah, this vendor financing, I mean, that's the biggest example in the world. It sounds like a blown up version of what's been happening with Germany and Greece, with other examples, etc. I want to return to these Austrian thinkers that inspired you. It's interesting to hear about that, and I see on your website you've been particularly inspired by Ferdinand Lips, and you refer people onto the Lips Institute. Why have you picked that out as opposed to the Mises Institute or others, and why is Gold Wars such an educational book for people?
Well, Gold Wars came later for me. I read that probably, I think it was 2005, and that's when I really began to understand the relationship of gold as being the centre of the financial universe. And Chris Powell, who's the treasurer of GATA, often uses that phrase and has become a good friend. And certainly Gold Wars espouses that relationship between the financial sector, government and money. And to talk about GATA, and they're really an organisation that wants freedom of speech, really, and they want to, they're really a reporting agency, for want of a better phrase, for what's happening in the gold market in relation to central banks particularly, and why isn't that information on central bank behaviour within the gold market not freely made available? Why is that made freely available? There is no doubt, and there's just Gold Wars exemplified it, a whole history from the eyes of Switzerland, from a Swiss perspective, as to the intervention and subversion of gold and financial markets. And why do you do that? Because really gold is the canary in the proverbial cold gold mine in terms of your currency being debased. And if your currency is being debased, that puts under pressure your bond markets. If your bond markets are under pressure, you're not able to finance at a proper rate, and that ruins your whole welfare system. You don't get re-elected. So in terms of Austrian speak, the statists want to maintain control. They need to make sure that gold is suppressed in order to keep bond rates lower, very simply.
Gold is a great enforcer of financial responsibility everywhere.
Good phrase. We've
been sort of discussing a slightly corrupt, a fully corrupt monetary system here. Is there anywhere in the world at the moment which gives you encouragement where sound money might be reintroduced or introduced? Perhaps you could talk about that.
Oh, that's a very good question. Well, obviously there's movements within various states within the US. That's always a positive.
Utah and
yeah, exactly. I see there's a motion within Switzerland to get 20% backing to gold again. I think these are healthy developments. I think I actually have not read the paper, but someone put on my desk before Christmas, and I got around to reading the coexistence of the fiat system and gold system, which I think is happening in many ways now. Clearly, I espouse more a free gold concept, and maybe I'm sort of pie in the sky stuff, but as you probably know from my piece on monetary singularity, I believe that powers aside, that actually through technology we will be able to use gold in payment systems independently of the fiat currency system. So you could have a coexistence there until such time that bad money is driven out, good money comes in. That could be a positive outcome. In terms of clearly the people who are pushing most for gold and silver within their society, it's clearly Asia and particularly China. It's more gold, it's not silver. Definitely from all my discussions with not only at the state level but also just at fund management level, you can see that there is an unofficial edict to move into physical gold, and but unfortunately they don't have a free market system, so I can't get wholly excited by it. But do I think that there is an emerging market of Russia, China, maybe even Japan at some point might join that, and maybe Brazil, who have very little in terms of official gold holdings, but they are doing bilateral agreements between themselves involving gold. I can see that. I can see that transition of a group moving into gold, and that will have to make the West rethink, particularly the US. But the US has got a lot of gold, allegedly.
Allegedly.
I mean, it's interesting you mentioned James Rickards. He was formerly lead counsel at Greenwich Capital before my time. And, we know mutual individuals, and I had a very nice chat with him at the gas conference, and we keep in touch from time to time. And he's clearly a really insightful individual, and I think that what I like about that book, though, was that he says there's a possible roadmap. This is the roadmap. We could go several ways. I don't agree with everything he's put in his book, as I want in a free market, but I think it's a very refreshing look at the world. I believe his motivations are just to educate people about it, and I think he's achieved that, and it's definitely food for thought, and I would recommend that people read that book, because I think at the end of the day the point he really makes is actually all those who write off the US, you do so at your peril, because they still have an inordinate amount of gold, and that puts them in a very strong position. They are the Saudi of gold, basically.
Well, Ben, thank you very much for your time today. Really appreciate it.
No, thank you very much. Cheers.
Well, that's all from us and Ben Davies today. You can see more interviews on our website in the research and analysis section, subheading guest interviews. Thank you very much.